How can something digital be rare? With Bitcoin, scarcity is built into its code. The halving is a pre-programmed event that happens every 4 years or every 210,000 blocks. Instead of finding less gold, Bitcoin miners see their rewards cut in half. This isn't a corporate decision, it's hardwired into Bitcoin's DNA. The halving slashes the reward miners get for verifying transactions and adding them to the blockchain. Before April 2024, miners earned 6.25 Bitcoins per block. After the halving, it dropped to 3.125. This process is automatic and unstoppable. The halving is why there will only ever be 21 million Bitcoins. Each halving slows the creation of new coins, making Bitcoin scarcer over time. The first halving in 2012 cut rewards from 50 to 25 Bitcoins, then to 12.5 in 2016, 6.25 in 2020, and now 3.125. Each event marks a new era, tightening supply and shifting the economic landscape. Like gold, you can't just make more Bitcoin, it gets harder to mine over time. Satoshi Nakamoto designed Bitcoin to resist inflation and government interference. The halving enforces digital scarcity, making Bitcoin unique among currencies. It's a simple idea with massive consequences for miners, investors, and the entire crypto world. Let's talk supply and demand. When supply drops and demand rises, prices go up. The halving cuts the flow of new Bitcoins in half overnight. Before April 2024, 900 new Bitcoins were created daily. Now it's just 450. Meanwhile, demand is growing. More people, institutions, and products like Bitcoin ETFs are entering the market. Less supply, more demand, that's the recipe for price surges. Big players, hedge funds, corporations are now competing for fewer coins. This isn't just theory, it's Bitcoin's core design. Unlike traditional currencies, Bitcoin's supply is fixed and predictable. The halving reduces Bitcoin's inflation rate, making it a hard asset. This built-in scarcity is what sets Bitcoin apart from any other money. It's why many see it as digital gold and a hedge against uncertainty. The halving is the engine behind Bitcoin's long-term value. That's why so many are watching what happens next. History shows a clear pattern after every halving. Bitcoin's price surges. The first halving in 2012 saw Bitcoin jump from $12 to nearly $1,000 within a year. In 2016, after the second halving, Bitcoin soared from $650 to almost $20,000 by late 2017. The third halving in 2020, Bitcoin climbed from $8,600 to over $68,000 by 2021. Each time the supply shock took months to play out, but the result was the same. A bull run. Investors watch these cycles closely, using history as a guide for what might come next. The fourth halving in April 2024 has set the stage again. The supply of new coins is lower than ever, and expectations for 2025 are sky high. While past performance isn't a guarantee, the pattern is hard to ignore. Analysts are comparing this cycle to previous ones, searching for signs of another surge. The real impact of the latest halving may take months to unfold. It's a waiting game, but history suggests big moves could be ahead. The halving isn't just technical, it's a catalyst for market excitement. That's why the world is watching Bitcoin's next chapter. Will history repeat? Everyone's paying attention. For miners, the halving is a pay cut. Revenue drops by half overnight. To survive, miners must get more efficient. Cheaper electricity, better hardware, constant upgrades. Older machines that once made money can quickly become unprofitable. Only the most efficient miners stay in business, the rest are forced out. The price of Bitcoin is crucial. If it rises enough, miners can offset their losses. That's why miners are often the most bullish on Bitcoin's future. The halving also drives industry consolidation, with bigger players absorbing smaller ones. This survival of the fittest strengthens the network. The process is tough, but it keeps Bitcoin secure and resilient. The halving forces innovation and weeds out inefficiency. With the 2024 halving behind us, all eyes are on 2025. Supply is tighter than ever, and demand from big investors is growing. Spot Bitcoin. ETFs have opened the door for mainstream money to flow in. Every new dollar is chasing fewer coins, setting the stage for potential price moves. But remember, Bitcoin is volatile and risks remain: regulation, macroeconomics, and sharp corrections. The halving is more than a technical event, it's a stress test and catalyst for the entire crypto market. It forces miners to adapt and highlights Bitcoin's unique scarcity. Will history repeat? 2025 could be pivotal. The world is watching to see what happens next.